Identifying resistance pivots. This segment follows identifying support pivots to include the examination of resistance pivots and their effect on price movement. Together with a thorough identification of support pivots, taking the time to identify resistance levels as they apply to a stock's current price will help you accurately analyze how much opportunity or risk you may be taking within any trend. In addition to identifying resistance levels, we'll turn our discussion back to include support pivots and examine the ways support can become resistance and vice versa. Understanding the interrelationship of support and resistance will not only aid your technical analysis skills, but also make your trading more timely and effective. The first thing to remember about resistance analysis is that in order to apply to the current trading price, only levels above the current price are considered resistance. In identifying support pivots, you became familiar with the term pivots as it applies to support. Pivots apply to resistance analysis in the same way. As a price climbs to new highs, at some point traders will decide they are satisfied with the profits they have made and begin to sell. When this happens, the increase in selling demand pushes the price down off of its recent high. In other words, the price goes up, pivots, and moves back down. When a stock reaches a high and reverses, which is also referred to as a bounce off of resistance, traders can take this reversal as an early warning sign and take profits. This action allows them to get out while the price is still higher than where they bought before a more significant downturn develops. In a downward trend, directional traders can also use bounces off of resistance as opportunities to enter short trades. Visually, resistance can be identified using downward trends or previous price drops off of high levels. Just as a bounce lower off of resistance leads a stock with downward momentum to drop to even deeper lows, a break through or above resistance often acts as a strong upside catalyst. This break is one of the classic signals aggressive traders watch for to find early buying opportunities. This type of break is one of the reasons a downward trend line is one of the easiest ways to identify immediate resistance pivots. Resistance makes a little more sense using a simple analogy. If you place a trampoline in your house and start jumping on it, you'll probably hurt yourself. Why? Because you'll hit your head on the ceiling. The ceiling inhibits your ability to rise as far as the trampoline can propel you. Resistance does the same thing to a stock's price. It keeps the price from reaching new highs. Resistance provided by a trend is one of the strongest influences on driving a price to new lows. The strength of trend resistance is one of the reasons traders use breaks above a downward trend line for buying opportunities. In order to drive the price past a downward trend line, there must be significant buying pressure to accommodate the move, which often provides momentum for a continued upside rally. When using a downward trend to identify resistance, you can use a downward sloping moving average or your own manually drawn trend line, connecting the declining highs that define the trend. Most traders actually use both techniques to identify resistance levels as well as trend direction, since they are not mutually exclusive. This chart provides 3 clear examples of downward trends acting as clear resistance. The first case covers a period of about 2 months. We can see clear bounces off of trend resistance in February and late March. Our second example covers a similar amount of time, with resistance bounces coming in late May, mid-June, and early July. While our third example covers a very short period of time, with a strong downward bounce in early August. In addition, we can see the points in early April and mid-July where a break above resistance helped provide momentum to drive the stock to new high levels. In addition to our moving average lines, which act as a very good reference for our downward trends and the resistance bounces we have just identified, we have added manually drawn trend lines connecting the declining tops of each trend. Remember that your trend lines may not match up exactly with a moving average, but they should match the direction of the trend for the period you are considering and be in roughly the same area in order to be effective. Along with trend resistance, being able to look at a chart and identify resistance using previous highs is critical to your technical analysis skill. Remember that as you look for previous highs, they can only be considered as resistance if they are above the current price of the stock you're analyzing. Within the scope of a price's cycles up and down, previous highs are useful. Since they acted as resistance to create the high at that time, odds are good they will act as resistance again should the price again approach those levels. Just as a break above trend resistance acts as a strong upside catalyst, a break above resistance provided by a previous high often requires enough energy that the price will continue to rally even higher and create a new high. When considering a trade on any stock, you should take the time to identify as many levels of resistance as possible, since they represent the most likely high point the price can reach and can help you establish price targets to exit trades and realize profits. This chart demonstrates several examples of previous highs which acted as resistance and forced the price lower. Although we have identified 6 separate instances of resistance, we actually only have 3 levels of resistance that apply to the current trading price. The high from March is actually below the current price, so it doesn't count as resistance. The highs from mid-December and early August are above the current price and count as one resistance level since they lie along the same line. The same is true for highs from January and April, which provide our second resistance level. The high from July is our third. The appearance of common resistance levels at different points in time lends strength to the idea that level should again act as resistance. The higher the number of occurrences, the stronger the resistance will usually be. To this point, we have only considered previous support or resistance levels to identify current levels of support or resistance. One of the precepts that you should make sure to remember is that previous support and resistance levels can change roles depending on where the stock's current price is in relation to them. A previous level of resistance that is now below the current price can act as new support, while a previous level of support that is now above the current price can act as new resistance. This concept applies not only to looking back in time, but also in anticipating breaks above or below support or resistance. If a price breaks above resistance, the upside momentum should lead the price to continue moving higher. If this is true, then the resistance that was just broken should now provide support, or strength against decline, to the price in the future. By the same token, a break below support will usually begin to act as resistance, keeping the price from rallying back to its previous highs. Keeping this interchangeability in mind will help you manage your trades more effectively, particularly in loss management. Although there are other examples on this chart of previous support becoming new resistance, or previous resistance becoming new support, we have highlighted 2 levels that apply to the current price of the stock we're looking at. In December, the price reached a low point and moved higher, which acted as support in mid-February. After breaking below this level in late February, this support level became resistance in mid-March and briefly in April. Since the price is now above this line, it is considered support and could act as an effective level to use for loss management. In mid-July, the price found support and moved higher, but since the stock's current price is now below that level, it is considered resistance. traders who may have entered a trade within the last few days would use this level to plan their exit and take profits.